Welcome back to Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Today we have here the Scott Shellady, also known as the cow guy, the guy you are used to see on the Fox screen. Scott, how are you today? I'm going to ask you straight about this week market reaction. Yesterday, we had a very significant high. How do you analyze this stock buying at this time?
Well, we've got there's a few things. Number one, we've got a ready and willing workforce, which is good for the economy. We're coming off of lockdowns, so that there's a much more buoyant feeling out there. We're entering our summertime, so that's also another good feeling that investors have. We've got very, very low interest rates. We've got very, very low energy prices. All of these things add up to maybe the stock market going up, and as well as you've got the Federal Reserve Bank standing behind stocks as well with more free money, right? So free money, a great workforce, cheap energy prices, and low interest rates. That adds up to maybe erring on the side of caution and getting long the stock. I think it's a little buoyant. I think it's more feelings rather than facts. We got some more bad news today when it came out as far as initial jobless claims. But right now the market doesn't care about bad news. Right now the market wants to go higher and is going to go higher because of that. We're not doing that much today as much as we did the last few weeks, but in a 50-day trading time, we've gone up over 8,000 points in the Dow, which is pretty phenomenal. So right now, we're trading on feelings, not facts, but we'll wait and see because it's still got a long summer to go.
Yeah, you are one of the guys that think that the economy is going to recover slowly. So, what farmers can expect because the ethanol market is just reacting very slowly. So, what do you think will be the impact on corn?
Well, the ethanol market is trading with the oil market. Oil has gotten better. It was horrible a few weeks ago, but it's gotten better. But that doesn't still make you feel fantastic about corn because corn goes into ethanol, and as your customers or your viewers may know, 1/3 of the balance sheet of corn is ethanol. So if you don't, much of the ethanol balance sheet is corn. If you don't need ethanol, you don't need corn, and that's been a problem. So the good news is today we've got some buoyant markets. The markets are higher today across the board when it comes to say corn and beans. But do you want to plant corn and suddenly be raising something that's very susceptible to and the energy prices, or do you want to plant beans and raise something that's very susceptible to the Chinese-U.S. relations? Farmers are going to have a difficult time this year. They're already talking about how difficult it's been. We've already got low prices. I mean, I just looked at them before I came on air today, and it's just we need a lot of the farmers in the U.S. need 385 D's corn. We're still about 40 cents away from that. We need some decent rallies across the board to get things going. But again, if you plant corn, it's an energy product. You're going to be tied to oil. If you plant beans, it's something that the Chinese have been interested in. And if they don't plan on doing the purchases that they've signed up for, then you're in the middle of a Chinese-U.S. trade war. So not a lot of good places to run and hide for the farmer this year.
Yeah, and the U.S. trade with China will suffer unexpected consequences. I mean, I'm one of the guys that would not trust the Chinese government, and it seems they are not keeping their promise regarding the U.S. agreements. So they probably won't fulfill the phase one of the agreement. Do you agree with that?
Well, I'd like to see them fulfill phase one. I mean, they've got commitments to buy. I think I said yesterday, $36.5 billion worth this year and $43.5 billion next year. So, right, and well, they're not going to give us the whole truth, the whole story. I'm not anti-Chinese. I mean, hey, I was over in China towards the end of last year, December the 24th. I was in China, so they can be a great trading partner, but they're also going to be a problematic trading partner. And I think right now we're in the problematic zone. So I agree with you. I wouldn't trust anything right now because they've already said they're not going to buy, but then the next day they turn around and buy. They've got these commitments for the phase one. We'll see, but we need to see a lot more work done on their end to make me feel comfortable about what might be happening. And with what happened with the coronavirus, that's just made that relationship all the worse, not including the tariffs. So the coronavirus and the tariffs, it's just not a good landscape. And you're right, I just don't have the confidence that I would need to have if that was going to be my big trading partner.
Yeah, another complicating factor would be that the Brazilian farmers are very competitive right now. I have never seen a so competitive market farm economy in Brazil for the last several years that I worked in the industry. Probably this is a lot more currency related than any other thing, but well, how do you see this another factor for U.S. farmers?
Well, if it's not going to be, there's so many things to worry about, right? So if it's not the Chinese tariff coronavirus situation, then it's going to be an energy situation with corn. And then now you've got the US dollar so strong, making the Brazilian real look so cheap. I mean, just to put it in perspective, from January to April of this year, Brazil exported around 906 million bushels of beans. That's more than we did since February of 2019. So they're really doing a lot. And if it wasn't for the fact that they've had a bad herd when it comes to their hogs, they didn't have a big meal demand. They would have taken more beans from Brazil. So that's going to be another issue. Now the dollar is starting to get a little weaker, and that's helped a lot, or it is helping a lot. And that has made a difference. So dollar gets cheaper, and I think it will get cheaper. That will help to take away some of that problem. But it's still going to be a problem. So there's another reason why, if it's either going to be the relations with China, the relations with the energy market, or what's happening in the FX market, it's going to be difficult. This year is going to be a difficult year for the farmer.
And what would you highlight as an upside? Because we have a lot of bad news, but we have to bring some good news for the farmers to keep going. Maybe the wheat market.
Well, I tell you, we have a family farm myself, right? So I feel the pain. And I would say this, in 2008, it looked a lot like it does today. And that was the beginning of a decent run. So this could be just the beginning of a decent run. That there's a lot of similarities between then and now. And I think that I'd like to hang on to that. Also, I would say is that we haven't really talked about Mother Nature, right? So we still could have a Mother Nature issue. And we're going to every year during the life cycle of corn and beans, we'll quote unquote, we'll kill the crop once per year, right? And we haven't done that yet. So we had a little bit of a cold scare earlier, but that's going to happen, right? And so what I would say to the farmer is, you'll be okay, but you just have to be very good about managing your marketing, right? That's going to be the most important thing, obviously. So use all the tools out there. This could be the beginning of something good, because right now it looks so bad. But again, go back to 2008 and look how things took off from there when we got out of the financial crisis the last time around.
The cow guy. Thank you, Scott.
All righty. Have a good day.